Hey everybody, this is Stock Chart of the Day, Profit from Pessimism. So today we're going to look at something really quickly here. I'm going to do two updates this week because I did not do one last week. I've been doing a lot of members updates. That's why I haven't done so many free updates. And, we're kind of in the doldrums here of summer. So another reason. So we're going to just look at here. We're going to look at something that not many people are talking about, but I think could be very, very key. We're going to be, is what's happening in Japan and the bond market there worrisome? This is the 10-year treasury. And for years and years, Japan was kind of the first country to do quantitative easing, had these huge debts, was subsidizing, obviously, their bond market, subsidizing, whatever. So you can see it really started in the late 90s. That's when the first time their 10-year bond went below 1%. And, it went a few times to almost 2%, 1.5%. But really, it's spent in the last 10 years, or even more than that, from about 2011, 2012 to basically last year, it's spent most of that, all that time below 1%. And actually, in a lot of that time from about 2016 to 2019 into 2020, it was below zero. It was negative. You can see it was negative 0.24 at the low there and negative 0.22 here. And, it was right around zero in 2020 and 2021 after COVID. But now it's going up, and it's because global inflation has gotten higher. And also, I think there's this old saying that nothing happens for a long time, then everything happens at once. And this is what's happened, is that as Japan has kind of been in this deflationary kind of doldrums and low growth and high government debt for the last 30 years, nothing really happened, and they hadn't really had to pay the piper. The Japanese government debt, unlike the US, is all domestically owned, which helps them be able to suppress rates. But now we're seeing this, as we can see here, this 1.6% on the bond, is actually the highest level since 2007. So we're at nearly 18-year highs. And if we were to go, for example, to about 2%, you see we'll be at the highest level since 1998. And of course, 2008, 1998, 17 and 27 years ago, the market was trading at, Japanese debt was a lot lower than it is now. So it can't really, if I would say that, remember, a lot of the debt is owned by the central bank. So the interest just goes back to the treasury. But I would say that if Japan goes to like 2.5%, 3%, they're in real trouble fiscally. And this is also important because they own $1.1 trillion of US debt. They're the largest individual holder. So they may have to repatriate that debt to bring it back home to defend their bond market, to maybe do an economic stimulus if their country, if their economy is in a bad way, in a bad recession, depression, etc. So this is interesting, and maybe this is the first country to enter in the West like a sovereign debt crisis. And I'm not talking about the pigs. I'm talking about the major economies. US, UK, Germany, Canada, etc. Like maybe this is the first country in the G7 and the whatnot to really experience that. And of course, if they were to print a ton of money and to buy their bonds to try to suppress the rates, they're going to devalue the yen, and they could really have really bad inflation. So the question is the bond vigilantes, and like I've talked about this in a way, and also it could not just be Japanese government. A lot of Japanese companies have investments in the US. Maybe they would have to sell assets and bring them back home because, they'll probably be demanded by the Japanese government to reinvest in their own economy. So I think this is a really interesting thing. And this could be the first kind of maybe domino to fall or shoe to drop, as they say, if there is some kind of debt crisis going forward. And this is happening quietly because it's still not in a crisis scenario yet. Japan can still do this. And they're already talking about Japan's got to do a couple more rate hikes. And I think Japan basically is dishonest about their inflation. Like when everyone else was having near double-digit inflation back in 01, or back in 2022, 2023, Japan was saying like their inflation was just a couple percent. And I've always been a little wary about the whole deflation thing in Japan because Tokyo is still one of the most expensive cities in the world. And part of the reason is these low rates, even during this malaise in the economy, have helped propped up, prices like that. Right? Because you can go, remember mortgage rates, like in Japan, like when we talked about those mortgage rates in the US being a couple percent, they've been like that for like decades now. Right. And then also too, I think of Raul Paul, I don't know if you know him, he runs a Real Vision website. I think he was famous for when he bought his house or built his house. in the Cayman Islands, I think somehow he got the bank to do a Japanese yen loan, and he did it for two reasons. Number one, the interest would be a lot lower on the loan, and number two, he expected the yen to devalue against the dollar, which it has. So when he was paying back the loan, selling dollars to pay back the loan in yen, he would have that happen. So let's quickly look at the yen before we sign off here. And we're going to look at the yen here. And we can see, it bounced in the spring and then it's kind of come off. But we're going to get like an 11-year chart so we can show you, because, we were hitting 11-year lows early last year. So the question is this a bottoming base? Is this another leg lower? But we have had a big devaluation in the end as well. So we have to see what happens. The issue I have with the currency rather than the bond market there is that the U.S. also has some kind of crisis. They'll start cutting rates and doing QE, and the U.S. dollar can roll over. But anyhow, let's see if this is finally. I've been thinking something like this could happen in Japan for 20 years. But the market can remain irrational longer than you can remain solvent, as they say. And that's basically it. So everybody take care, and I'll talk to you all later.